Okay, hello everyone. Well, this video is going to be relatively short, but the subject that we are going to cover in this video is on portfolio income. Now, again, just as a reminder, I cover this each time, but we have three kinds of income that we're talking about. We talk about earned income, which is really income from a job. We have passive income, which is passive from investments where you're not active. That's why they call it passive. So this would include things like perhaps owning a piece of rental property, or maybe it's a vending route where someone else manages the route for you. It could be certain forms of royalties if you write a book. Each time the book is sold and you get some money for that, that's passive income, that kind of thing. So then the last kind is portfolio income, which we're going to talk about in this video. Now, portfolio income is the kind of income that you will hear the most about from the financial planning community. All right? So there's all kinds of different folks out there that kind of fall under this umbrella of financial planning. It could include stockbrokers that work for some of the big brokerage houses. It could be you've heard of well, you may not have, but it's called CFP, or a certified financial planner. These are folks that sometimes are independent. They have this is a designation that they get from going to some training and some classes, and their job is to work with individuals to kind of create a blend of financial products to achieve that person's or that family's financial goals, right? You may do it on your own. There are a lot of, Charles Schwab was one of the first kind of do-it-yourself, although they've kind of come around and now they offer some opportunities to get advice and so forth. But that was one of the early, lower cost, set up an account, you kind of manage your own portfolio kind of thing. You could really buy anything you wanted within stocks, bonds, mutual funds, that kind of thing. Other products that fall into this category are, annuities. We talk about annuities. And by the way, we're not going to get into huge detail on each of these in this video. This is really, again, the kind of the high-level overview, so you understand what portfolio income is, how it's generated, how it might fit into your overall plan, and so forth. Bonds, mutual funds, and we'll have in the video blog, we'll be posting detailed videos on each of these kinds of things so that you understand how each of them work and how they might fit into your portfolio. So that's a pretty good list. You might even throw in insurance in here and so forth. So what's important to know is portfolio income. So we'll just say financial planning community here, and this is really how financial planners make their money. They make their money by essentially creating transactions or managing assets for people. So you may put your money with, and we'll call her Sally the financial planner, right? And let's say you put $100,000 with her to manage. She'll give you advice, and she'll come back and say, I think we need to buy these stocks and these annuities and these bonds and these mutual funds, and then buy some insurance. And she'll come up with a portfolio. I mean, that's kind of where the term comes from. She'll come up with a portfolio, different investments for you to make. And the idea is that the value, if the value is 100% when you start, the idea that the value increases over time to some bigger number, maybe 150%, right? Of course, the long-term goal is, this is really long-term growth, and then I'll say and or income, right? Typically the growth piece is when you're younger. You're more interested in really trying to grow this portfolio as quickly, but possibly as safely as possible. And when you're older, you're more interested on the income piece. So you want these investments, whatever these investments are, to be spinning off dollars that you can use to live. Right? That's kind of that's the fundamental idea behind portfolio income and the whole financial planning community, is that you take, again, let's come back to your model. You make income from a job, minus your taxes, equals kind of what you have to spend, minus your to pay. If you believe in pay yourself first, of course, then you're going to have savings and investment next, minus expenses. This is all your living expenses. Equals, don't know what that bottom number is going to be, right? Probably close to zero. So this whole community is focused on this line right here, the savings and investment line. So all of what they do, they don't talk about your income from your job. They might get a little bit into some tax planning, but like I mentioned in the video on earned income, there's very little that can be done from a tax planning perspective. Some, and you can get a little bit creative with it, but there's less and less all the time. So they're really dealing with this box right here called savings and investment. And so what they want you to do is they want you to send the money into the account that they're managing for you, and they will find stocks and bonds, annuities for you to invest in, mutual funds and so forth, with the goal of maintaining whatever your goal is, whether it's growth or income or some blend of the two. Okay, so when we talk about portfolio income, though, what we're really talking about is the earnings from these investments. So these investments, it's kind of, it's this piece right here. These investments will throw off interest and dividends. And the main difference between the two, of course, is interest will come from any security that you purchase that pays interest. So typically that's going to be a bond, type investment. But it also could be just some, an interest-bearing account, that kind of thing. Dividends is income from equities. So I guess a better way to put it is interest is income from debt usually, because bonds are debt for someone else, but you buy them and then they pay you interest. So interest is income from debt. Dividends is interest from equity. So if you buy a stock, if you buy a share of Coke, they may pay $1 a share. I haven't looked it up, so I'm making this number up, but they may pay $1 per share in dividends. So if you had 1,000 shares of Coke, you'd get $1,000 of dividends every year. Okay, that's portfolio income, right? The $1,000 is portfolio income. Just like if you are if you buy some bonds and those bonds pay you $1,000 in interest, okay, then $1,000 in interest is also portfolio income. Okay, so I think that's pretty much all I wanted to cover on this particular video. As I mentioned, there will be more detailed videos really covering some of the unique characteristics of some of these products in the video blog, so check there later for updates there, and we'll see you in the next video.